5 a.m. in New York City. Good morning, I'm Bonnie Quinn. Here's what you need to know. Putting on hold for now. Oil dips after President Trump said he might hold off on attacking Iran. Silver also lower after that blistering rally as the U.S. restrains from imposing import tariffs on critical minerals. And it's a wrap. Goldman Sachs and Morgan Stanley earnings set to close out big banks' reporting season. Let's take a look at these futures because we're back in the green after 2 days of declines, and it looks like quite substantially positive, at least for the Nasdaq 100. TSMC, of course, putting some enthusiasm back into this market on AI. But we also, as I said, saw 2 days of declines for the S&P 500, 0.5% yesterday. The Nasdaq 100 was down more than 1%. So maybe it's time for the dip buyers to re-emerge. Let's take a look at the bond universe because geopolitical risks seem to be receding just a little bit after the Greenland meeting and after Trump's Iran comments. You see the 30-year yield back down below 480. That's quite the move in 24 hours. We were well above 480 yesterday. The 2-year yield not moving so much, but the 10-year yield back down to 413 as well, still within that 10 to 20 range. In terms of metals, you're seeing it there too. So we have a good 4+% drop for oil on the Iran comments. Crude in New York back down to below $60. And silver, it actually almost got to $94,000 yesterday. We're just back above 90,000. Bitcoin, though, still above $97,000 per coin. So we're going to take a look at all of this and how the market is positioning risk-wise in just a few moments. But first, let's get to some individual movers. And for that, we go to Chloe Melly.
Good morning, Bonnie. It's a really good day for the semiconductor industry after a strong result and a very upbeat outlook from TSMC. And TSMC is, of course, a bellwether for this industry. And these results signal very strong AI demand and also very strong capital spending to meet that AI demand. And therefore, we are seeing that read across this morning for those chip equipment stocks. And ASML in particular actually moved to a record high in Amsterdam today on the back of this. Moving on to Ocular Therapeutics, which is also moving higher this morning, actually moving much higher, more than 10% after a report that Sanofi was considering a higher takeover bid for that company. It had previously rejected a takeover bid, but we'll see if it accepts this one. In the meantime, we are moving higher there. And finally, Dell is also in the green this morning after being upgraded by Barclays. And Barclays analysts have said that this is a company that will benefit a lot from demand from orders of AI servers. And therefore, we are moving a little bit higher this morning in pre-market trading, up about 2.3%, signaling a positive outlook for that company.
All right, Chloe, thank you so much. Chloe Melly there in London. And in just moments, we're going to be speaking with Amundi's Monica Defend on this market. Later this hour, Saul Martinez will join of HSBC for a closer look at bank earnings. Monica Defend of Amundi Investment Institute looking ahead to the Fed's rate path this year, writing, quote, we still expect 2 Fed cuts in 2026, but political pressure on the Fed keeps policy risk elevated and reinforces the case for a cautious approach to U.S. duration. She's head of Amundi Investment Institute and joins us now. So, Monica, I'm just curious, you had been particularly concerned about the U.S. labour market weakening. We did get some fresh data finally. What is your read of this U.S. labour market now?
Well, in general, the U.S. labour market compared to history is weaker, but not as weaker as we would have expected. And probably now the rhetoric on politics entering the monetary policy is kind of sounder than the immigration law and how this has an impact on the labour market.
Now, does that make it more or less possible that we'll see a cut in the first 6 months of the year? So many houses calling for 2 cuts, but later in the year, particularly after we get a new Fed chair.
Well, no, we stay with the idea that in the first half, we will experience 2 cuts. And this is justified by the market fundamentals. Having said that, the U.S. economy is proving much more resilient than expected. Probably, and something that we are closely looking at is the housing market and the wealth effect, because this is what has been sustaining the consumption pattern so far. And this is possibly where a potential weakness might arise.
So the housing market could be a pain point. You've also said that we've seen a profit cycle that's been pretty solid. Robust momentum and sentiment is obviously there, and there's ample liquidity. So you're actually moving a little more pro-risk, at least in the near term, right?
Yes, look, in a scale from 1 to 10, where 5 is a neutral position, we're at 6. So the current environment, notwithstanding the good fundamentals, we'll see the reporting season if we will experience a broadening of the EPS solid growth, the liquidity, and the accommodative stance of the central bank in an environment where geoeconomics, geopolitical risks are really adding to the tail risk. We prefer to stay in this mild risk-on position through credit and through equity.
Yeah, I mean, it's a real thermometer, right? It goes up and it goes down, this geopolitical risk. So it's very hard to actually read on a day-to-day basis. I mean, obviously, today we're less concerned about the geopolitical situation than we were literally just yesterday. So, Monica, this steepening bias as well is something that you've had for some time. I'm curious, does that continue throughout the year, even given questions over, or I guess maybe because of questions over Fed independence, but also through the next round of Fed personnel?
Well, the fact that we do expect steepening in the curve, which is something, by the way, that we do expect to materialize globally from Japan to Europe, is really related to the level of fiscal debt. And fiscal expansion, in particular in the United States, is fairly prominent. If we go back to the declaration that the U.S. administration has been doing over the weekend, we have seen some increase in the risk premium on the 30-year, but all in all, volatility in the fixed income market remains fairly compressed. So the call of the steepening is primarily related to the fiscal dominance and the level of high fiscal debt that we see.
Are you concerned at all about differentials? So central banks getting more hawkish in the rest of the world, but obviously staying pretty dovish here in the United States, according to you?
It depends to the level of asynchrony. In particular, let's talk about the ECB, where we expect some further cuts, which is not a consensus call. Actually, there are some economists claiming for a hike of the ECB. Well, I cannot imagine the Fed cutting and the ECB getting rates higher. So some kind of asynchrony is justified, but different fundamental positions across the regions. But look, all in all, they cannot go too far. And if you look at the BOJ, where we do expect a further hike to happen, still they are in an accommodative stance.
Okay. Monica, can we talk about China for a second? Because we've seen the yuan trade below 7 now for several days. And the PBOC has been extraordinarily busy with some, easing measures, essentially. I know China is a place that Amundi is incredibly interested in, but what's the stance at the moment?
Well, people talk about K economies. So I would prefer the expression exports are on fire, while domestic demand and the housing sector still on a highs. And this is going to persist over the year. We do expect 4.5 as GDP growth for 2026. I would say that from a global perspective, probably they are not anymore the only engine. They are more a stabilizer of global growth with the policy support that we think will be there, but it won't be a bazooka.
Okay, so maybe a little caution on China. Now, you spoke of stabilizers. You actually moved your price target for gold up to 47.50 precisely because you consider it a stabilizer. I mean, we're not far off that now. So if you have a gold allocation, do you stop here?
No, we think that gold is something that structurally will increase. Our 2028 target is even higher. And the reason is that in the short term, definitely it works as a portfolio diversifier at a time where the US dollar is challenged in this role. But on gold, there is structural demand that is coming from the central banks trying to diversify their reserve allocation. And this is going to stay. That's why we remain constructive on gold and fine-tune the allocation from time to time.
All right, Monica, thank you so much. Wonderful, their case study on an allocation. Monica Defend of Amundi Investment Institute. Now to other top stories trending on the terminal this morning. Silver retreating on signs investors took profits following a blistering rally and as the US held off from imposing import tariffs on critical minerals. President Trump said he would negotiate bilateral agreements to ensure adequate supplies of critical minerals. Silver outpaced gold, jump almost 150% last year. Germany's economy grew for the first year since 2022, GDP rising 0.2% in 2025, following 2 consecutive annual contractions. Expansion last year was driven by household consumption and government expenditure. However, investment fell and trade acted as a drag. Richemont sales jumped to a record in the final months of 2025 as holiday shoppers splurged on its watches and Cartier jewellery. Sales on a constant currency basis climbed 11% in the fiscal third quarter, with sales at the jewellery division rising 14%. Cartier is experiencing a strong boost in popularity as celebrities like Taylor Swift and Timothée Chalamet turbocharge demand for its jewellery. Coming up, oil extending losses as President Trump hints at holding off attacks on Iran. More on that next. This is Bloomberg.
The killing in Iran is stopping, and it's stopped, and it's stopping. And there's no plan for executions or executions. So I've been told that on good authority.
President Trump there on perhaps holding off on Iran because of its crackdown on protesters, which obviously so far has killed thousands of Iranians, according to activist groups. Oil falling for the first time in 6 days, supply woes easing. Bloomberg's Will Kennedy joins us now for more. Will, I hadn't thought there was that much of a geopolitical premium in here, but obviously down 4%. Traders must have been a little bit worried, or at least they're relieved today, obviously.
Yeah, I think a lot of people had been protecting themselves against the possibility of an escalation in Iran. Iran remains an important oil exporter, of course, and it is always something that makes the oil community nervous. That's partly because of Iranian production, but that's also because of the other risks associated with any escalation in the region around the Straits of Hormuz, that vital shipping lane between the Gulf and the Indian Ocean that is runs next to Iran and over which Iran could assert control. And as tensions have de-escalated, clearly some traders have decided to take some money off the table, lock in some of those recent gains, but prices still remain fairly elevated compared to where they have been in recent weeks.
Yeah, President Trump yesterday saying that even though oil now again is below 60, he wants it at $53 a barrel. I mean, will it get there, Will? There's obviously not that much that he can do, I guess, to bring it down there.
Well, the background is fundamentally bearish, as we've been saying in recent months, Vonnie, that there is a structural oversupply in the market driven by the continued strength of US shale, and new oil from South America. Venezuela can be part of that at the margin. But there are these global political tensions that keep a risk premium in the market. And one recent event that has really helped to keep prices higher than they may otherwise have been was in the Black Sea related to the war in Ukraine, where action against a key export terminal in Russia has actually kept 600,000 barrels a day of Kazakh crude out of the global oil market, and that has kept prices supported and has a meaningful disruption. So the broad picture is still probably structurally bearish, and we may get oil in the 50s this year. A lot of analysts think that's possible. But these flare-ups that we see around the world, Venezuela, Iran, Ukraine, Russia, are reasons that traders are buying despite the broader picture.
Will, what about container rates? Because they've been going higher and higher and higher. Obviously, some companies have been benefiting. Bloomberg Economics and estimates that we could see a higher than $100,000 for container rental at some point soon. I mean, does that continue?
The shipping market has come back. It's been very volatile in the last 5 years around different things, including the pandemic and action in the Red Sea. I think one thing to keep an eye on tanker rates, shipping rates across the board, whether that's containers, whether that's tankers, is the Red Sea, whether that Red Sea ship owners will be more confident about sailing through the Red Sea. They've stayed away in the last couple of years because of Houthi action against ship owners, and that's lengthened shipping rate globally, increased the overall demand for shipping. And if the Red Sea were to reopen, and we've seen some shipping companies test the water by going back through, including Maersk, the biggest container line, that could actually reverse some of the gains that we've seen in shipping rates in recent times.
All right, Will, thank you so much. Great context there from Will Kennedy. Meanwhile, tensions brewing after the meeting between diplomats from Greenland and Denmark and US officials in Washington. Danish foreign ministers saying there is fundamental disagreement on President Trump's demand for the Arctic territory. Take a listen to Republican Senator Tom Tillis pushing back on President Trump's ambitions.
There is not support for this in Congress, regardless of what they may say in the White House. I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
Germany will now be sending military personnel to Greenland after Denmark revealed a fundamental disagreement with the US after that meeting with officials. Joining us now from Copenhagen is Bloomberg's Sarah Scholin. So, Sarah, I mean, how would you rate how the meeting went? Obviously, the two sides weren't going to come out with, a major agreement and a resolution to this matter.
I think the meeting probably went as well as it could. There was some concern going into the meeting that the Danes and the Greenlanders would have nothing to offer and that would just escalate the conflict. It hasn't escalated it, but it also hasn't solved it. The main takeaway for the Danes and the Greenlanders is that there's now set up a working group, and they'll meet over the next few weeks where they're going to discuss the path forward to beefing up Arctic security. That's been one of Trump's key claims in why he wants to take over Greenland. It's because the Denmark and Greenland are not doing a good enough job of protecting this pretty vast territory. So now they feel like they have a diplomatic channel where they can address some of these concerns. Right, the Danish Prime Minister just put out a statement a few minutes ago where she's still saying the conflict is still here.
Yeah, for sure. It's not going anywhere, brewing, as we say. Sarah, thank you so much for that update. That is Bloomberg's Sarah Scholin. Turning to tech, TSMC boosting tech stocks with a forecast higher than expected capital spending amount this year. Asia's most valuable company also expected revenue growth close to 30%. Joining us now with the latest is Bloomberg Intelligence's tech analyst Charles Shum. Why did this come as such a surprise? Charles, did we not know what was happening behind the scenes?
Yes, because actually if you look at the CapEx number, last year it's 41 billion. That's already a record high. And then the consensus actually is expecting this year is just about 46 billion. But then the real number that disclosed by the management is actually above 52 billion. That's more than 70% higher. And actually, this is making in the assumption that there's actually more demand. The supply from TSMC is still a very tight situation. And you have to consider that actually the money that they spend in 2026 is not going to convert into the supply in 2027, 2028. You will only have to wait until almost the mid of 2028. And so by committing this capital, actually TSMC is effectively telling the market that the AI demand is structural and it will accelerate for at least the next 5 years. This is a strong signal to for the market and telling the market that the short AI infrastructure build is not over yet for the next 3 to 4 years.
Yeah, and we're going to see that percolating just through today's trading action. Charles, thank you so much. Bloomberg's Charles Shum. And Bloomberg is speaking to the CFO of TSMC. You can catch that interview from 6 p.m. Eastern. Coming up, another person shot by U.S. federal agents in Minneapolis. More on that and a look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Washington Post, an ICE agent shoots a man in Minneapolis. A federal agent shot a Venezuelan man in the leg a week after the death of Rene Good. This as demonstrations continue in the city. Mayor Jacob Fry has again called for ICE to leave Minneapolis.
This is an impossible situation that our city is presently being put in. And at the same time, we are trying to find a way forward to keep people safe, to protect our neighbors, to maintain order.
Next up, Reuters reporting in an exclusive interview, President Trump says he has no plans to fire Jerome Powell, despite the Justice Department criminal investigation. However, Trump added that it was, quote, too early to say what he would ultimately do. And on the New York Times front page, Republicans block efforts to check President Trump's power in Venezuela. GOP leaders succeeded in pressuring fellow senators who initially supported the measure that would have limited the president's military authority in the country. In a social media post, President Trump had condemned those Republican senators' stupidity and said that they should lose their seats. All right, coming up, President Trump holds off on his official minerals tariff, leading silver to lose its shine. We'll discuss all that next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Putting it on hold for now. Oil dipping after President Trump said he might hold off on attacking Iran. Silver lower after that blistering rally as the U.S. restrains from imposing import tariffs on critical minerals. And it's a wrap. Goldman Sachs and Morgan Stanley earnings set to close out big banks' reporting season. So let's take a look at those futures because you can see relief in them. TSMC putting some nice enthusiasm into the AI trade overnight, and that has the Nasdaq 100 pointed higher in terms of futures. We were down 1.1% on that index yesterday. Now the Russell 2000 had another day where it beat out the S&P 500 yesterday. In terms of futures, it's pointed directionally in the right direction, but perhaps not quite as enthusiastic there as for the S&P. The 30-year yield is back below 480 and the 10-year yield is back around the 414 level. Not seeing too much movement in the 2-year yield. Again, geopolitical risk premium coming out of this market just a little bit. If you look at metals, that's probably where it's most obvious. Gold is lower, silver is lower. Brent crude and WTI both about 4.5% lower, with WTI down below $60 a barrel. Bitcoin, though, holding on to most of its gains. It's still at around $97,000 a coin. Let's get some individual numbers now this morning. Chloe Melly has those for us in London. Chloe.
Good morning, Vonnie. Chip equipment stocks are moving higher, in the green this morning after TSMC reported a stronger than expected profit and also provided a very upbeat outlook. So this signals strong AI demand and really strong capital spending to meet that demand. And of course, that is really good news for those chip equipment stocks. All of those happening to also be TSMC as suppliers. And so we have already seen ASML actually move to a record high in Amsterdam this morning, and also strong pre-market moves there from those U.S. names. Moving on, but staying within this same story, because TSMC, the upbeat outlook is also very positive for those Magnificent Seven stocks, and we are seeing Nvidia in particular really move those Mag 7 stocks higher on the back of that, because of that belief in the longevity of this AI boom. And finally, Ocular Therapeutics is also in the green this morning, because Sanofi, the French drug maker, is said to be considering a higher takeover bid for that company after being rejected once before. And we are seeing that really driving that stock this morning with a move of almost 13% in pre-market trading.
All right, we're going to take a look at those stocks later today and see how they fare. Chloe, thank you so much. Chloe Melly there. Silver's rally coming to a halt, with President Trump holding off from imposing import tariffs on critical minerals. He said he would instead negotiate bilateral agreements to ensure adequate supplies of critical minerals. Joining us now from Washington is Mika Solner of Bloomberg Government. So these bilateral agreements, who will they be with? Mika, do we have any details of what all of these might mean?
Yeah, I think the White House has been, relatively private on these discussions, but I do think that this is another push that the administration is making in terms to tamp down the effect on critical minerals and the threat of some U.S. adversaries in China, for example. I mean, this is a topic that just came up as well, internationally. So I think that we're going to see some more movement here in the next couple of days. I know that there's going to be a briefing today, so we may hear more on what's next to come.
And then Trump signaling he's going to hold off on another attack on Iran for now because he's heard that the killings might be stopping. What more do we know on what is getting planned behind the scenes?
Yeah, absolutely. Yesterday, I was in the Oval Office with the president when he announced that, an official from Iran initially contacted him. He did not specify who for security reasons, but killings are stopping. There will be no executions. And for right now, that has halted, I think, some of the tensions that the president and the threats that he was putting out there, saying that the U.S. will take action if they continue to kill and threaten protesters on the ground, peaceful protesters on the ground. So for right now, it seems that that is at a standstill, but we're going to see, if Iran holds true to what they're saying.
Yeah, and these were comments that the Iranians had obviously told him on the phone. So, no verification there except what the president is willing to believe at the moment. The Danish Prime Minister, meanwhile, saying there's, quote, fundamental disagreement over Greenland after meeting with U.S. officials in Washington. Take a listen to Republican Senator Tom Tillis speaking to Bloomberg on President Trump's demands.
There is not support for this in Congress, regardless of what they may say in the White House. I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
So, Mika, what does this mean?
I think lawmakers on Capitol Hill are extremely uncomfortable with the idea and the posturing of that Trump is having towards Greenland. But, I think that senators who are not running for re-election, those like Senator Tom Tillis, are more willing to speak out on this. I think the ones that we need to look at is the ones that may be pressured or vulnerable senators and House members that are going to be pressured by Trump greatly on his agenda and what he needs. But I do think that there are a lot of people that are uncomfortable in terms of Trump really going after, and wanting to purchase Greenland. And we're seeing Europe really rise up and kind of tamper those threats too.
Yeah. Tell us about the situation where senators changed their minds about President Trump's powers in Venezuela and how they changed their mind.
Yeah, I think it just goes to show the power that the President Trump still has over senators, even those that are often willing to buck the president on his agenda, especially when it comes to national security issues, his foreign policy agenda that has become extremely aggressive in recent months. Trump called out by name the 5 senators that initially voted against the War Powers Resolution last week, and he was able to flip 2 senators against that. So I think it just goes to show the bully pulpit that he has, even if Trump says that this person should not be reelected. I think he still has the authority and the power to allow people to change their mind and pressure members to get on his page.
All right, Mika, thank you so much. Mika Zollner there of Bloomberg Government in Washington. Turning back to tech now, TSMC injecting some life into its U.S. peers after reporting a forecast higher than expected capital spending this year. Asia's most valuable company also sees revenue growth close to 30%. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, how does this keep happening? TSMC just kind of blowing things out of the water just once again.
Yeah, that's right. And I think it just underpins just how much investment is going into AI infrastructure further down the value chain from the hyperscalers and one of its biggest customers, NVIDIA. That they're talking about $52 to $56 billion of capital spending in this coming year. That's about $6 to $10 billion, or 15 to 20% higher than the market was expecting, and a big step up year on year, over 10 billion up year on year. Now, obviously, there's still a lot of question marks about the sustainability of this AI boom and whether natural demand from enterprise customers will really kind of come through to sustain it. But the company was clear to point out that their investment cycle is typically a 2 to 3 year process. US, and it's done in very close cooperation with their key customers. So I think they were trying to ease any concerns there might be that they might end up with stranded capital, that this investment has been very well thought out, and it reflects not just a one-year demand cycle, but a multi-year demand cycle.
Yeah, and confirmed as well that it's not a wish or a fantasy or whatever. Meanwhile, Alibaba planning to link its flagship online shopping and travel services to its AI app, Qwen. I suppose it was only a matter of time. Matt, how will this impact the bottom line? Will people travel more, book more now?
Yeah, it's, as you say, it's almost inevitable that this was going to happen, Quen, that their big AI platform, I think about 100 million users, and we're going to see this across the world, that these big AI platforms look to kind of make clear connections underneath that with the whole range of e-commerce shopping and online services that people already use. So we're almost kind of going back to this notion of walled gardens, where, you know, if you're using one of these apps and you ask it to book a trip for you or buy some shopping for you, that it's actually going to kind of channel you maybe kind of unconsciously down into very specific suppliers of those services. So I think certainly for Alibaba, you know, maybe it means that more of their customers are going to be buying more of their online purchases through the Alibaba ecosystem, which you would think would inevitably underpin and maybe boost their revenue and profit growth. We'll have to see how long that trend lasts and whether customers ultimately kind of push back against it, and once they start to realize that actually they're buying things perhaps more expensive than they could have found elsewhere. But I think for sure 2026, this is a trend that's going to build.
Yeah, it's going to be fascinating to see the behavioural changes. Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. And don't miss our interview with the CFO of TSMC. That's at 6 p.m. Eastern Time. Now to other top stories trending on the terminal this morning. President Trump faulted Ukraine's Volodymyr Zelensky as the main obstacle to an agreement to end the war with Russia. In a Reuters interview, Trump said Russian President Vladimir Putin is ready to make a deal. Trump has oscillated between blaming Ukraine and Russia for failing to reach an accord. Amazon is challenging Saks' Chapter 11 filing, saying the retailer breached a deal related to the sale of Saks products on its website. Amazon further said that its equity investment is presumptively worthless. Amazon took a minority stake in Saks in 2024 as part of a deal that helped facilitate its acquisition of Neiman Marcus. Richemont sales jumped to a record in the final months of 2025 as holiday shoppers splurged on its watches and Cartier jewellery. Sales on a constant currency basis climbed 11% in the fiscal third quarter, with sales at the jewellery division rising 14%. Cartier is experiencing a strong boost in popularity as celebrities like Taylor Swift and Timothée Chalamet turbocharge demand for its jewellery. Coming up, we're going to take a look ahead to Morgan Stanley and Goldman Sachs results with Saul Martinez of HSBC. This is Bloomberg.
When you look at this idea, you know, it will remove credit at a really important time from the people that most need it, and so there will be negative consequences across, you know, of credit availability across the spectrum of credit card users.
Wells Fargo's CFO there is speaking to Bloomberg. The last stretch of bank earnings this morning with Morgan Stanley and Goldman Sachs on deck. And of course, they have had a huge run, both of them. Joining us now is Saul Martinez, head of US Financials Research at HSBC. Saul, I know that, you know, we've seen this massive financials, you know, price increase over the last year. But your only buy rating left is on Citi, so you think valuations are really a bit stretched. What do you want to hear from Morgan Stanley and Goldman Sachs today that they might, you know, grow into their valuations?
Yeah, thanks for having me on. I think what you want to hear is that the upswing in capital markets activity can persist, and they're really within the capital markets businesses. There are really two big businesses. There's the institutional, the sales and trading business that deals with institutional investors, and there's the investment banking activity as well. And I think there's a sense that we are in an upswing, that we may be entering into a super cycle of investment banking activity. And I think the results of Citigroup, Bank of America, JP Morgan did reinforce that the outlook is good for investment banking. That the pipelines are strong, And the level of optimism, Morgan Stanley and Goldman don't give specific guidance, but they will give you a sense of pipelines and their expectations. And I think they will give a positive narrative. I think in the markets businesses where sometimes people don't may not focus enough on it because it is a much bigger source of revenues. Can you continue to grow is what we want to ascertain, because you've had now 2 very strong years of sales and trading. We're on track to have 10 to 20% revenue growth in fixed income and equities markets income, and we're at historically elevated levels. So have things changed such that the backdrop is one where this revenue source can continue to grow, or is there a risk of stagnation and even the wallet declining? So what their outlooks are for these capital markets businesses, sales and trading and investment banking, how optimistic are they that we can continue to see good growth here is a really important thing that we're focused on. We're also focused on what they're saying for wealth management and asset management, and can they continue to deliver on the strong results that they've been having over the last couple of years.
Yeah, I mean, so, on the investment side of things, we obviously saw a pickup in IPOs and M&A, and then we saw JP Morgan blowing things away on trading. So as you say, it will be interesting to look at those 2 businesses. What have you made of loan loss reserves so far? So Bank of America, for example, pretty materially lower than its peers.
I mean, it's just a sign that credit quality is good. It is a good, I think it's a good indicator of where the economy is. And the banks have had good credit numbers across the board in commercial and consumer loans, and even in credit card loans. You've seen net charge-offs year on year declining for some time now, delinquency rates declining. We may be at sort of the floor in terms of credit losses in credit cards, and there, Bank of America did indicate that we're below what they would view as a through the cycle loss level. But it's a good thing. I mean, credit is good as part of the bull thesis. As long as the economy remains resilient, I would not expect credit to be an issue. Obviously, you have to be on guard for that. And, if economic conditions change, then that could change. But it is a very different conversation than we would have 3 months ago when we were in the aftermath of Tricolor and First Brands, where credit and lending to non-bank financial institutions was a real focus. But so far, I think the banks have done a good job of giving us some more color around certain parts of their portfolio that people were focused on, and highlighting the characteristics in a way that suggests that the risk is contained.
Saul, what comments should we expect on this 10% credit card interest rate cap that the president wants to put on for a year? Will we hear from either of the banks on whether that type of thing is a good idea for the U.S. economy, even if it doesn't affect them individually?
I mean, it obviously doesn't. It's not a big driver for them. I mean, for Goldman, they're selling the Apple portfolio. It's still on their balance sheet, so there might be some residual impact there. But it's not going to be as much of a topic of conversation as it was for the banks who have reported. To the extent they do talk about it, I think it will be, more top down and consistent with what you said, Vonnie, more about the impacts on the economy, access to credit, and whether that could hurt consumption and overall economic growth. So there, if that were the case, that obviously there would be an indirect impact on Morgan Stanley and Goldman. I mean, what you've heard from the other banks who have reported is what you would expect to hear, that an interest rate cap would have pretty material and potentially even devastating effects on the profitability of the cards businesses. It would force changes to the economic models of these businesses, and it would likely lead lenders to change their or not lend to broad swaths of the population. So broad swaths of the population would lose access to credit cards. Rewards would probably be cut. Fees would go up. The managements have really, I think, managements who have reported have been very clear about that, yes. Those potential impacts.
So you say a favorable backdrop is pretty priced in for these universals, and it's obvious that it is, right? With this huge run up last year and continued run up this year, maybe just a little profit taken off the table after some results. But It's not so much for the super regionals. So I'm curious, what names are you most constructive on there, and might we see consolidation or some more deals?
Yeah, well, I'm glad you asked, because I generally don't get this question when I come on these shows. Because I think people, refer to me as a bear on the banks. I'm not a bear on the banks. I'm selective on bank stocks and the big banks. We do Loan City, but we like the super regionals because there is valuation support there. They have lagged considerably, and I think they're pricing in a backdrop that is not as favorable as what's priced in for universal banks, which is a little bit illogical in some respects, because a lot of the drivers that help the big banks also help, the super regional banks. So we have buy ratings on all the super regionals that we cover: U.S. Bancorp, PNC, and Truist, who start to report tomorrow. I think here, the things we're looking at, loan growth, is it picking up? They will be big beneficiaries of that, and that is, I think, an underappreciated potential tailwind. And I expect good results. I think PNC, we're especially focused on PNC this quarter. I think when they report tomorrow, they will give an outlook for net interest income that is very positive. We have the strongest net interest income growth in our coverage universe for PNC, about 8% growth in 2026.
Yes.
On an organic basis, not even including an acquisition that they have, which I think will be accretive, and I think they will highlight that. And I think credit will good, as we talked about. And I think they'll suggest buybacks are going up. And one of the one potential tailwind for regionals is also that buybacks are going up, capital rules may not benefit them as much as the universal banks, but capital rule changes will benefit them as well. So the direction of travel on capital returns is higher, and we expect double-digit EPS growth for all of them. PNC, U.S. Bancorp, and Truist, we like all of them.
And as you say, once we get the two big ones out of the way today, we'll start to look forward to those tomorrow. Saul Martinez, thank you so much, of HSBC, for joining us today. NASA Administrator Jared Isaacman will lead a Return to Earth news conference, which is happening right now in Washington, D.C. And in fact, he's saying that crew member of concern, that crew member for which the whole operation was cut short so he could get back to Earth and get some medical attention, is doing fine. Once again, NASA's Isaacman says that crew member of concern is doing fine, and they're all on Earth. Coming up, we'll get you set up for your trading day with more bank earnings, obviously, and Fed speak. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Morgan Stanley, of course, and Goldman Sachs reporting before the bell, wrapping up Wall Street's big bank earnings. Plus, we do get some data, weekly initial jobless claims at 8:30 a.m. New York time. And President Trump meets Venezuela opposition leader Maria Corina Machado at 12:30 Eastern. Let's take a look at some pre-market movers, because, of course, the AI trade is back. Nvidia leading the Mag 7. Also chip equipment stocks as well after TMC's bullish outlook. As you can see, some nice moves there for TSMC in particular, but also Lam Research. And this is your macro picture for the day. We have futures pointed higher, but look at the commodities space and also metals. We're seeing those come off the boil, literally, with New York crude down below $60 a barrel. A little geopolitical relief. Looks like the president is going to hold off on doing anything regarding Iran until he knows more for sure. That's it for Bloomberg Brief.